Welcome to the market video for the week of March 30th, 2015. My name is Michael Saul, also known as Tiny. Let's take a look at what happened last week and what I am looking for this week. So last week, we came into the week, I talked about us being in a coil. I was looking for us to go higher. Instead, we went lower. That's why we have to wait for confirmation. And even you could see Monday, it poked its nose out, but it couldn't hold the break. Instead, Wednesday came and what is it? Crashed me out again. Is that what the song goes by Billy Joel? Anyway, it doesn't matter. It broke through the short-term moving averages, broke through the 50-day moving average. On Thursday, we found support at the previous March lows, and on Friday, we just paused. Now, the real question is, do we hold this low, get back over the short-term moving averages, and move back to the upside, or do we break last week's low and head for the 200-day? Now, I do not believe we are at a big pivot in the market here. I don't believe it. I do not think the highs are in. I believe we have higher prices to be seen. On the short term, I just want to use last week's lows as a pivot. If we break down, yeah, could be a nice short. If we continue to hold it or we come back and test it and it holds, then we have a good shot of getting a bounce. It's a very poor idea to count the bulls out prematurely. All right, they have come to the rescue for the past few years. A lot of bear markets have been called. A lot of super gurus have been given out bear market lists, and they have fallen flat on their face. All right, they're looking to pick tops, and this is not. It's never the market to try to pick bottoms and tops. So I would love to say this is not the market to do that. Yeah, well, it isn't, because there is no market to do that. You want to recognize the trend and you want to stick with it. The trend is your friend until the end when it bends. And again, I mean, it's a cliche, but just so many people just don't understand that, and they just keep trying to pick tops and pick bottoms all the time. Now, the third choice, which I think there's probably a better chance of happening than an all-out crash from here, or even an all-out screaming rally, barring news, is that we consolidate for a while. I mean, this consolidation lasted several months here. Nothing to say that we can't get another one like that. And if that's the case, then we have to go to then it'll be called a stock picker's market. My personal belief is it's always a stock picker's market, but when the indexes are going sideways, you don't have the wind in the sails. You don't have the wind at your back. Okay, so you have to get more precise with the stock picks, rather than saying, well, as long as it's going in the same direction as the market could provide kind of a safety net. I mean, it's a little reckless talking that way, but when you have the strength of the market behind you, when you have the trend of the market behind you, it's easier to do a top-down approach. When you don't have that, you have to kind of start from the bottom, right? So the top-down approach is indexes, sectors, individual stocks. Well, when the indexes are going sideways, you can look at sectors, but if they're not trending, they're going sideways too, well, then you got to start with stocks. And you'll always find stocks that are moving either up or down. Okay, there are thousands of stocks. There are tons of ETFs. Usually there are sectors that are moving even when the broad market is going sideways. Here's the Dow. Looks a lot like the S&P 500. Mid caps, above the 50-day moving average. Nice, strong trend. Got hit on Wednesday. Last Wednesday, like everything else. Let's see if it can bounce back. If it breaks the 50-day, you got support down here. The Qs, NASDAQ, below the 50-day now. Looks like it could maybe kissing it. And if that's the case, then that means we could see a pullback. Got a lot of balance here. There's a lot of balance here. There's a lot of, I don't know what you want to call it, but there's a lot of, I know what to call it. It's just slipping my mind right now. But, there's a lot of trade here. Okay, there's a lot of volume in here, back and forth. So it could provide support. If not, you got the 200-day. But if you look, all the 200-day really is the low of this consolidation pattern. Okay, let's see. Let's see what else. You got the Russell. The Russell also got cracked on Wednesday. Now it's starting to bounce here. Also, with the rest of the market, Thursday, Friday. And again, if this is going to fall down, You got the 50-day moving average here, and then you have these lows here at 119.83. Let's look at some sectors. Semiconductors had a nice day on Friday, but held the 50-day moving average from the underside. So if they could get going, again, are the bulls going to come back and just buy this up? If not, you got the 200-day, which you came real close to on Thursday to test. Clat Tanker, it looks lower. If the market starts to slip, I'd be watching Clat Tanker for a potential short. Intel, I had a wicked day on Friday. So let's see if it's going to keep going up to the 50-day or the 200-day. If not, and it starts to fall back, then watch this one. Paul and I loved this stock when it was setting up here, and it just totally crapped itself, I guess is the only nice way I could say it. And then it set up here and continued lower. So if this can't get going after this day, well then, Intel may be headed down for this gap fill down here at the 28 area. All right, let's go to the banks. Yeah, the banks that were looking okay last week, they fell this past week. Held the 200 and the 50-day, though, so that's good. Bank of America looks weak. If the banks start to roll, Bank of America looks like a leader to the downside here. Citigroup holding the 200 and the 50, but if the banks give that up, and Citigroup does too, there's some room for this one to fall. Let's look at JP Morgan. They're holding the 200 and the 50 as well. Let's look at Bank of New York. All right, what's Bank of New York going to do here? All right, you have the pullback. Let's see if it can come out of this pullback here, or if it's going to come down and test the 50 and the 200-day. Broker-dealer. Good relative strength, but again, got whacked on Wednesday. And the real question is, what's going to come of these two candles that happened Thursday and Friday? All right, Goldman. Yeah, more sloppy than anything. Doesn't look terrible, but doesn't look great. Morgan, I talked about last week as being a laggard play. It did not trigger a breakout above this pattern here. You can see it actually fell down. Now it's back inside this channel. Legg Mason was acting nice now. It's more sloppy than anything. All right, let's look at some high flying tech. Stuff like Amazon. Is this a topping pattern? I don't think so. I think it's just taking a rest for now. You got the 50-day moving average as potential support. Apple at the 50-day moving average. If it falls below that, watch the 120 area. Googleicious broke out of the coil, now came back. So this is a failure here. But again, is it an all-out short? If last week's lows get taken out, could be a quick trip to the 50-day moving average. Netflix now below the 200-day moving average, but hasn't moved away from it yet. It's kind of hanging around there. So if it breaks down, you have support at 401.87, and then you have the middle of this gap, which comes in around 380. It's not perfect, but it comes in around 380. Caterpillar looks lower, still looks weak. John Deere held the 200-day. Let's see if buyers come in off of that. If not, and it loses this, then it could go down to the 84s where these lows come in. Let's look at bonds real quick. Bonds are coiled up. Wait for release one way or the other from here. If it breaks out, see if it can go up to these highs up here at 116 and 1830 seconds. If not, and it breaks down, well, then this whole thing could be a potential correction. Notes look similar. All right. Gold. To me, gold, this is a correction in a downtrend. Now, overall, we're in a downtrend, and then we go sideways here. But if you look at the short term, since up here in late January, this is a short-term downtrend, and we are correcting that short-term downtrend. Okay, silver. Between the 50 and the 200 day, it looks better than gold for now, but it doesn't look like it's ready to rally hard. Still think oil's going lower. All right, it poked over the 50-day, but it came back Thursday. Let's see what it does from there. Go through the grains real quick. Wheat looks lower. Soybeans look lower. And corn. Yeah, corn is squeezing between the 50 and the 200 days, so let's see which way it releases here. It's all squeezed up here. Coffee and sugar from my friend that always asks me to make sure I go over them. Coffee, Looks like it came out of this bear flag. It's just pausing here, but if it takes out last week's lows, looks like it can get a quick test down. Sugar, I mean, consolidating here, but it's in a longer picture downtrend. I don't think the dollar rally is over, and therefore I think the euro is going to go lower. I think it will go to at least par. I think it goes to all-time lows versus the dollar. That's my opinion. I think the yen is going to go, the dollar versus the yen is going to go higher. The yen versus the dollar, which is how you trade it with the futures, looks like it's in a sideways consolidation. I think it's setting up for a channel break to the downside. Okay, let's wrap it up. Right now, we are at the early March lows. I don't think it's a key level for the market overall. I just think on the short, like a key inflection point for the, the health of the market over the next few months. No, I don't think so. But I think on the short term, it's absolutely something to watch. So if we take out last week's lows, I think we can make a quick trip to the 200-day moving average. If not, and we lift up to the upside, we do have the short-term moving averages to get over and see if we can get the bull trend back, or perhaps a third option, which I think has a good chance of happening, is we consolidate. We get a few months worth of consolidation like we got from here. I mean, we're already doing it now for a few months actually here. So maybe it continues to do that. If that's the case, then we have to focus in on individual stocks that are either not market dependent or currently not market dependent, right? So it'll become a stock picker's market. It is a short week for stocks. We only have 4 days because Friday is Good Friday. We also have the job numbers due out Friday, even though the market is not open, but the futures may have a shadow session. If you are celebrating Easter, I want to wish you a very happy Easter. We will determine when we're going to do the strategy session next week, and I will be sure to email everybody. Make sure you are on the list at paulandsaul.com. Have a great trading week. I will talk to everybody in the next video.